I've been doing this 23 years and I don't get this question anymore. So I think this is an awesome question about what is a credit report and what information does it contain. So think of it this way. A credit report is just a detailed account of your credit history. The credit report, along with the actual FICO score or Vantage score, is essentially what's being used to measure your credit worthiness, or think of it as your ability to pay back the loan. But keep in mind that the credit report itself has evolved quite a bit over the years. Some information that's not included anymore than it was before was, your liens and judgment information is no longer included. It doesn't take into account, number one, your age, race, or religion. But it does now include trended data information, which shows your payment methods over the last 24 months. Now, it's not being currently factored into the credit score, but I think we all know on the horizon it's going to be something that kind of amplifies the current score or the new scoring models coming out. And the readability of a credit report is insanely important as well. And that's why we pride ourselves as Certified Credit, that we have the ability to customize a credit report to however our customers want it.
FICO score was established approximately 25 years ago to determine risk. It's highly used by mortgage companies, most banks, and other creditors. Mostly all mortgages are handled with the FICO score. There are other scores available, but that one has had the most success rate in determining the risk factor, especially on mortgages, because of the high risk involved.
So this is perfect because it does tie exactly into kind of what we're talking about with the 30% that's owed on your unsecured revolving debt. So, instead of talking ratios, we generally express them as percentages there. So it represents the amount of your revolving credit you're using, but you're going to divide that by the total credit available to you. So lenders, utilize this by, determining how you're managing your current debt. The FICO scores look at it the same exact way, and that's why it makes up about 30% of that score. So in the end, keep your balances low on your credit cards and you'll be fine.